The broader point that these things come up a lot I see in is that people who don't want to kind of assess Bitcoin for its properties will tie it to something else or speculate about its founding or funding. So, for example, obviously there's a big kind of theories out there that the CIA or the NSA made Bitcoin. And the funny thing is, if that were to be true, if in the future we find out there's obvious evidence that the CIA made it, it doesn't really change my view on it. It's cooler when like an anonymous cypherpunk makes it, or a group of cypherpunks. But literally, if the whole point of Bitcoin is that it's open source, auditable. There's no single controlling entity, even the developers.
Most people don't actually critique Bitcoin for what it is. They critique it for what they think it represents. Whether it's theories about who created it, who funded it, or which institutions might be connected to it, the conversation often drifts away from the one thing that actually matters, the system itself. And that's exactly the problem Lyn Alden is pointing out here. Because Bitcoin, at its core, isn't defined by its origin story. It's an open-source, auditable network with no central authority, meaning no individual, government, or developer can simply take control of it. So even if one of these popular theories turned out to be true, it wouldn't fundamentally change how the system operates. The rules are transparent, the network is decentralized, and participation is voluntary. That's where its value proposition really begins. And yet, instead of engaging with those properties, critics often shift the focus elsewhere, something Alden highlights in her response to recent commentary from Jon Stewart and Ben McKenzie on The Weekly Show. So in this video, we're going to walk through the key claims made by Jon Stewart and Ben McKenzie, and more importantly, how Lyn Alden dismantles them piece by piece. If you want a clearer, more informed perspective on Bitcoin, the crypto industry, and the narrative shaping public opinion right now, you're in the right place. Make sure to like the video, subscribe to the channel, and drop your thoughts in the comments. Thanks, and enjoy the video.
Well, I mean, it touches on an aspect that is real, which is that, this administration does have a lot of kind of crypto grifts going on, things that are either, like optically problematic or outright problematic in many capacities. But more broadly speaking, a point that Ben makes throughout the show is that it's primarily used for like illegal activity. In fact, at one point in the interview, he said like the first usage was illegal activity on the Silk Road. So that completely bypasses the use for WikiLeaks and for other things that predated that. It's the more, like you described earlier, he's either a critic or a cynic of the industry, and I think cynic's the right word because I think there's a ton to be critical about, especially in the broader space, the broad crypto industry. I mean, both of us have been very critical of it. I think it has to be taken with a very critical lens. Including, this administration's in many ways activities in the space. A lot of that is completely valid. But where the cynical aspect comes in is to lump it all together, the inability to steelman things and the inability to kind of do contextual comparison. And so, for example, the firm Chainalysis regularly puts out reports on, how much illicit activity is happening. And you get these big nominal numbers. But then you say, okay, well, what percentage of that is like of all crypto volumes, let's say? And it ends up being a very, very small number every time. And in fact, both of course nominally it's a much smaller number than the estimated fraud that or criminal activity that happens in the fiat system. But of course, the fiat system is far bigger. The funny thing is when you even do a percent basis, by most reasonable accounts, and there's literature on this, that there's obviously a very big band of uncertainty here. But by most estimates, even a bigger percentage of fiat is used for criminal activity than crypto. And so, in many cases, like a public ledger is the last place you want to do it. Now, of course, there are privacy solutions. So sometimes it is used for this. Another issue that he kind of does in that interview, he assumes that privacy is kind of implied for criminality. And it's interesting because, Jon Stewart's on the left, his audience is on the left. If you actually take these subjects and say, okay, globally, how many people live in very unfree, authoritarian, theocratic, dictatorial? There's across the board. It's like, should those people have alternatives? Should they have access to privacy? Should they have access to be able to transact value, even if a government disallows it?
Mm-hmm.
Or would John Stewart take the position as he did on sanctions there? Should the United States be able to surveil and control every financial transaction globally? Should we have that capability? Is it even healthy for us to have that capability? Sanctions are one of those things that the more you use it, the more you lose it. Kind of. I mean, there's already, even outside of crypto, there's already a bunch of organizations from representing kind of the majority of global GDP at this point, and certainly the majority of population, that are looking to build alternative systems, instead of routing every single thing through one country's financial system. And the broader crypto space, whether it's Bitcoin, whether it's stable coins, whether it's the million altcoins out there, that's just another piece that is available in that kind of broader tool set for various entities to make agreements that go around U.S. sanction capability. So,
all right, let's jump into another clip.
Like, what are the different products that exist in kind of the crypto universe, and what would be the difference between those products?
I would really just separate them into two categories, broadly speaking, which is the speculative cryptocurrencies, which is Bitcoin, Ethereum, and the 20,000 other or more. It was 20,000 a couple of years ago. It's probably more now. Cryptocurrencies that the price goes up and down. You can bet on them.
Yeah, I would broaden those buckets significantly. I think there's at least three and probably more categories, depending on how further you want to break out each category. So I think Bitcoin is pretty much in its own bucket. It's the first one. It's the largest one. It's the most liquid and secure one. It's the most kind of purposely simple and decentralized one. The one that most closely looks like a digital commodity or a protocol rather than a governance system. And so I think that's pretty much in its own category. Also, had a completely different launch process than almost every other asset in the space. Then there's, I'd say, stable coins are their own bucket. And so they basically say, okay, so there's dollars. There's been a long history of people that have offshore bank accounts, and stable coins kind of take the concept of an offshore bank account and compress the head space to like the tech overhead, so that anyone with a smartphone can basically have that capability. So people can have dollar accounts. Essentially, they can transact. This has obviously significant value for a lot of people outside of the United States. Sometimes in the United States for cross-border, anyone who send an international wire more than once has probably encountered some headaches with the opaque and slowness and the expense of that system. So it's basically a technological just improvement in some capacities, and kind of broadens access. And that category could also be broadened a little bit more for tokenization in general. So tokenized representations of gold, tokenized representations of highly liquid stocks or other assets. It's basically just a different accounting system that is a little bit more global than, for example, an ETF wrapper and things like that. They're still centralized, but the distribution has certain capabilities that are just not really available outside of that system. So that's a pretty valid category. There is a long tail of crappier assets in the space, but that's another valid category with a different use case. Then I would say the third category is more broadly every other altcoin, but that even could be broken up, which is there are attempts at like this difference of opinion of what a blockchain can do, what some of the ideal parameters are. So there's attempts to reduce auditability to make a blockchain more private. There are attempts to increase complexity to make it more expressive in terms of programmability, so that you can have DeFi, you can have NFTs, things like that. There are some serious programmers in that space, and some serious arguments put forth. I mean, you and me would be quite critical of that category.
Yep.
But there is a piece of substance in there, or there are different kind of schools of thought there. And then kind of the fourth category would be just outright memes, things that even the creators know this is a gambling thing that's going to be bet on for a few months or a few years, and then it's going to be irrelevant. And there's really no even promise that this could be something larger. And so there's multiple buckets here of just kind of different assets that lumping them together is almost like lumping Nvidia stock with a penny stock and having an opinion on all stocks.
When crypto crashes, people panic. When the stock market dips, people sell. But gold? Gold has held value for 5,000 years, and it's not slowing down. Most people don't know you can hold physical gold and silver inside a tax-advantaged IRA. With iTrustCapital, you can. Buy and sell gold and silver 24/7. No dealer markups, no waiting on phone calls, no outdated processes. Just a few clicks, same as buying Bitcoin. And here's what makes it powerful. Pair gold with crypto in the same account. One hedge, one growth play, one platform. Your metals are held with institutional-grade custody and full tax reporting. Gains inside a Roth IRA, tax-free. Real U.S. customer support. $100 bonus when you fund through the link below. Markets change. Gold doesn't care. What makes Lyn Alden's response particularly compelling is that she doesn't try to blindly defend the crypto space. Instead, she acknowledges a reality that many critics, and even investors, often overlook. There are serious issues within the broader industry. From speculative excess and meme coins that function more like gambling vehicles to high-profile failures like exchange collapses and questionable token projects, there's no shortage of examples where the space has fallen short. And Alden doesn't shy away from that. She makes it clear that criticism is not only valid, but necessary. But where she draws the line is in the leap from criticism to generalization. Because lumping Bitcoin, the most decentralized, secure, and battle-tested network, into the same category as every other crypto asset is not just inaccurate, it's misleading. And this is where her analysis becomes crucial for investors. Data consistently shows that illicit activity represents a very small percentage of total crypto transactions, and in many cases, even less than what occurs within traditional fiat systems. Meanwhile, Bitcoin's transparent ledger has actually helped law enforcement track and recover funds in ways that would be nearly impossible in cash-based systems. So the real takeaway here isn't that crypto is perfect, but that understanding the differences within the space is essential, and for investors, that means focusing less on headlines and more on fundamentals. And that brings us to the core of the debate, the question of value itself. Because one of the most repeated claims in the interview is that Bitcoin isn't tied to anything in the real world, that it's simply lines of code driven by speculation. But as Alden explains, that couldn't be further from the truth. Let's get into that.
A lot of that is valid for parts of the space, but not all of it. So, for example, Bitcoin is tied to physical energy. It's not redeemable for physical energy, but it's tied to it, right? So it basically it's a method of doing a decentralized ledger. And much like how the dollar's not tied to anything, the euro's not tied to anything, the yen's not tied to anything. Those are centralized ledgers, and
they used to be tied to gold, for instance.
They used to be tied to gold or other precious
different
metals.
Periods throughout history. Fiat monies, or before they became fiat monies, it was paper money tied to gold, for instance.
Yeah, and after kind of the world's biggest rug pull, like a series of kind of gradual rug pulls, they're just purely fiat. They're basically backed by government authority, which is that you have to use this ledger. This is what you can pay your taxes in. This is legal tender. You have to accept it. And various capital controls, various other kind of constraints of taxes put on other competing assets. So they're kind of backed up by government authority and things like that, and they're centralized. And Bitcoin is basically, it's in some ways it's like that, but instead of a centralized spreadsheet, it's a decentralized spreadsheet. So instead of backed by government authority, it's backed by cryptography and energy. So if you have the equipment, you have the energy sources, and then the distributed node network to enforce the rule set, kind of these pieces come together to, at least for 17 years now, run a decentralized ledger. And you're not just betting on the idea, you're betting on some of the properties. I think one of the closest comparisons would be that in the age of the internet, there's been a rise of protocols. So TCP/IP, simple mail transfer protocol, Ethernet, USB, so hardware protocols, software protocols, kind of like just communication standards that become very entrenched. And it's not that hard to just make a version that's slightly different. But that slight difference makes them incompatible. And so it's not that no one can invent, a comparable USB. It's that it's up against the network effect of 10 billion devices in the world having USB ports on them already. And it updates over time in a backward compatible way in many cases, so that kind of network effect updates, but remains kind of consistent. And it's very hard to go up against. And so if you could have somehow, so these are not companies, sometimes they were invented by companies, sometimes they're open source. And if you could somehow buy, if like each protocol was kind of split into a number of units, and you could kind of buy units of that protocol and kind of assess its qualities and assume that it's going to grow, or have a thesis that it's going to grow, that's comparable to Bitcoin's kind of the protocol of value transfer and value storage, on the internet and elsewhere. And so that thesis, I think that's the more Steelman thesis for what people are doing when they're deciding to hold something like Bitcoin. And I just think that, again, more nuance could be applied there.
Another clip from this clip that made the rounds on Twitter and really caught John's attention, it had to do with the story about Epstein funding the MIT lab and some Bitcoin development. What's your take on Epstein's tie to Bitcoin core development?
Well, it's funny. I mean, as far as we can tell, his crimes were committed to the banking system. Right. I mean, one of the worst places to do it would have been on an immutable ledger, especially back then when a lot of the privacy layers hadn't really been developed yet. But going back further, the broader point that these things come up a lot I see in is that people who don't want to kind of assess Bitcoin for its properties will tie it to something else or speculate about its founding or funding. So, for example, obviously there's a big kind of theories out there that the CIA or the NSA made Bitcoin. And the funny thing is, if that were to be true, if in the future we find out there's obvious evidence that the CIA made it, it doesn't really change my view on it. It's cooler when like an anonymous cypherpunk makes it, or a group of cypherpunks. But literally, if the whole point of Bitcoin is that it's open source, auditable, there's no single controlling entity. Even the developers, they can't push updates. They can just merely provide updates that the node network or portions of the node network can choose to incorporate. And there are and can be competing clients that all engage in this consensus. And so literally it can be evaluated based on its own properties. Right. So earlier he kind of said there's different consensus mechanisms. It's all stupid. It's because we're not actually there's no kind of interest there in actually tackling in any sort of technical sense what's being done here, or how they're different, or the fact that it's one of the most transparent assets in the world. It can be assessed on its kind of own qualities, more than many other investments. So there's this broad trend among critics to kind of just lump it in something like that. The CIA made it, or Epstein funded it, therefore bad. Right. So that's point. The Epstein point is, back then, I mean, one is there's multiple funding sources for various hubs. I mean, this is MIT for starters. There's been multiple funding hubs for Bitcoin Core and elsewhere in Bitcoin development. And then there's multiple donors to those different hubs. And Epstein was he was a broad investor in many different things. He had a number of different, aside from his horrible interests, he had a number of interests in other various kind of investment fields. But they kind of overstate how much kind of actual connection is here reliably, because it's mainly an attempt to just not actually assess the fundamentals in any meaningful capacity.
By the end of this discussion, what becomes clear is that many of the strongest criticisms against Bitcoin don't necessarily come from bad intentions, but from incomplete understanding. And that distinction matters, because when complex systems like Bitcoin are reduced to simple narratives, whether it's only used for crime, or it has no real value, or even it's tied to figures like Epstein, what gets lost is the underlying structure that actually defines the network. Lyn Alden's analysis cuts through that noise by bringing the focus back to fundamentals. Bitcoin is not a company. It's not controlled by a board, a government, or a single investor. It's an open-source protocol that operates on consensus, secured by energy, and maintained by a decentralized network of participants across the globe. That means no single individual, regardless of how controversial, can shape its direction or control its outcome. And that's a critical point when evaluating claims like the Epstein narrative. At the same time, Alden doesn't suggest that the space is beyond criticism. In fact, her framework encourages the opposite. It pushes investors to separate signal from noise, to distinguish between Bitcoin and the broader crypto market, to question narratives on both sides, and to approach the space with a level of discipline that matches its complexity. Because the reality is, this is still an emerging system, and like any emerging system, it comes with both opportunity and risk. But stepping back, there's a bigger picture forming here. As global financial systems face increasing pressure, from inflation, capital controls, and geopolitical fragmentation, the demand for alternative systems is growing. And whether through Bitcoin, stablecoins, or other blockchain-based technologies, we're already seeing the early stages of a more open, more programmable financial infrastructure taking shape. That doesn't mean every project will succeed. It doesn't mean the road ahead will be smooth. But it does suggest that dismissing the entire space based on outdated assumptions or sensational headlines might be missing the point entirely. If anything, conversations like this highlight why informed analysis matters now more than ever. If you found this breakdown helpful, make sure to like the video, subscribe for more in-depth crypto analysis, and share your thoughts in the comments, especially on the Epstein claims and how you think they impact Bitcoin's narrative going forward. Thanks for watching, and I'll see you in the next one.